Hello friends, good week. How are you? Vladimir here, and this is the weekly review for 13th of January 2013. What a beautiful date, isn't it? 13, 1, 13. Beautiful. So what do we have in the markets, and what could we expect for the upcoming week? Well, the last week was a bit weird, I would say. Especially from the euro side. I didn't think that the euro will rise, even though I did tell you on the prediction for 2013 that if the euro dollar makes something in between 135 to 137, maybe a bit higher even, I'll be looking to sell there full power. And despite of that, I did not see the euro rising, and I don't think there is a reason for that to rise. From one side, Draghi said they will do all they can. Situation in Greece kind of getting better, which I don't believe to at all. But the situation in other countries are terrible. And as long as the investors are forgetting from the euro issues, the euro is going up. But there is one big problem. As I said, not once, in order for the euro to recover, for the eurozone to recover, they must have weak euro. And Draghi chose to hold the interest rate on its rate, 0.75. He did not want to cut it to 0.50. And with his beliefs that the euro economy will recover around the end of 2013, the euro flat up. Now the question is it here to stay, or is it's the biggest bluff? I think that there is a room still to go. I said it not once that the euro dollar could push all the way to 135, all the way to 137 even, and there I'm preparing myself. But we now have to watch something, and I do want to show you. Now pay attention. The first thing happened is that this trend line is broken, right? And it looks like 1, 2, 3, 4, and now we're on a 5. But it could turn to be also a long 3, then 4, and then the last 5 to 137. Technically, the break out of this resistance, break out of the divergence line of the RSI, and the crossing up could still give the euro a chance to go higher. But be careful, it could turn to be a very, very, very strong false break. If the next day is closing, and Monday is closing, Monday or Tuesday, closing below this 133, and MACD turns negative again, negative slope, that could turn to be a beautiful false break. And if it makes the false break, it means one thing: we are going down, most likely. I prefer to be conservative and to wait for the break of this trend line. So a false break and a break of this trend line will definitely open the door for the euro dollar to go lower. When I say definitely, I mean of course most likely. Nothing is guaranteed, especially with such a pair, and especially with the fundamental things in USA, so, and in Europe as well. Well, that's why I think if it makes the false break, good. You can go and trade aggressive with a small stop above the last high and a target like 127, huge target. But to be conservative means to go and trade again with the break of this trend line. Now pay attention for the weekly chart. After the triangle here in the first break, we got 1, 2, 3, 4, 5. Now we're getting A, B, C. This C could turn to be exactly, or even a bit higher, like the first move. It means 137. So if we don't get this false break I was talking about, it means we most likely will keep pushing bit higher, and then bam, prepare for something real. Now pay attention. If I'm looking on the average true range channel of the euro dollar, you can see that the prices are out of the prices, which means the euro is overvalued. Of course, it could keep pushing. We saw that happened a few times. Doesn't mean that it's going to start right now, but it means we're coming to the end. And if we make this push up, pay attention where the weekly chart will be out of the average true range channel around 137 again. So that's why these levels become so important from my point of view. So my opinion, if you get a false break, you can go aggressive. If you want to be conservative, wait for the break of the trend line. And in case it does not make the false break and keep pushing, then above 135, I would start to look for the sell, for the divergence, and for sell signs. Sell signs, from my point of view, could be false breaks, and of course, bearish candle patterns. Talking about the euro dollar, the same is everywhere about the euros. Euro pound. Pay attention for something interesting. Let's put it here. Euro pound on the monthly chart right now is reaching the 20 MA. If it keeps pushing and well, until the next month, for example, or maybe 2 months more, and playing in between 0.83 up to 0.85 or so, then it could go and create for us monthly bearish hidden divergence. On a weekly chart, there is no sign to sell yet. It's just breaking through this resistance. It could be treated as head and shoulders, inverted head and shoulders, and that could mean that the euro pound is going to rise all the way in between 0.84 to 0.85. But there we are coming again oversold. Pay attention, overbought. Sorry. If we keep rising in between 0.84 to 0.85, we're coming out of the range. On the daily chart, we're already there. So the rise up could come, but it's going to be ugly, most likely. When I say ugly, I mean zigzagging up, zigzagging down, and at least at the end pushing up, but it could be not nice. I do think there is more to go, but definitely exactly as for the euro dollar, same here. Watch for every false break, and it could be false break. To act conservative, take this trend line and wait until it is broken. Once it's broken, we are going down. And that's my opinion about the euro pound. Trend line break, we're going down at least to the previous low. And if it does not make it and keep pushing higher, 0.84, 0.85 range could become perfect level for a sell. So get ready. Same of course with the euro Australian, which I was talking about many times, and as I said, I think there is a room to go lower. Now how exactly? Where if we measure this trend line at this expanding channel, we have 1, 2, 3, 4, 5. We might go now for 6. It could be 128, it could be 129 or so, but guess what? From there, most likely we are going for 7. 7 means all the way down. And remember, for the euro Australian, I was talking about this neckline. Remember? Here, this one. I was talking about this neckline for the head and shoulders. It's still holding, and it's still holding. So of course, if it turns around and breaks below this expanding channel range, that could be the beginning to go down for 121, 120. Every euro you take, I become more and more and more and more bearish there. Every euro you take. That's my opinion. I think it's a big bluff, and once investor style to pay attention to the reality in Europe again, they will wake up the bears. That's my opinion. And of course, I could be mistaken. I'm just talking from what I see on the chart. As you know, I'm not a big genius on the fundamental things. I'm talking from the chart. That's the main point, I believe. All right. So the next things. Now, on the previous week, I was talking about the bearish cycle coming for the yens. Until we got more push. We got new highs for the euro yen. We got new highs for the pound yen, and for Aussie yen, and for every yen, and for the dollar yen as well, of course. Well, I warned about that and I said it could happen and it still could push higher, but from my point of view, uh, it's building the end, and as we're coming closer to March April range, the yen pairs most likely will start to move down. And from my point of view, this trend line will still be the final target. Now, where exactly from? It could be here, now 119, it could be 120, it could be 123, which is this level on the weekly chart. We are all everywhere. We are extreme. So, from my point of view, this up move is very, very limited. The only thing which is important to pay attention here is to trade it without any leverage, with negative leverage, and have patience because it's going to take time. After the bearish cycle that will come from here or from a bit higher, after the bearish cycle that will come back to 110, maybe 109 even, if it's going to be fast. So something like that, or from here or from higher. That's how it's going to be. After that, I do believe that we will have some good buy opportunities, and for long run I don't see any reason why euro yen cannot push to something like 138, for example, for long run, of course. So I think it's going to be some retrace, some pullbacks, then up again, then down again, building some waves here, and then all the way up again. That's my opinion. Same with the pound yen, of course. On the weekly chart, we're extreme, very much, very stiff resistance range. On a daily chart, more than 20 candles right, perfect divergence, RSI extreme, RSI divergence. Same about the dollar yen, same about the Swiss yen, same about the Kiwi yen, and of course same about the Aussie yen. Now about the Kiwi yen, pay attention for the last two candles, right? It means bears. It shows bears inside. Of course also the Aussie yen, pay attention here. It means the bears are here and the correction is about to begin. That's what it means. That's about this pair. All the yens, of course. That's from my point of view. That's about what about to happen. I would say that these are the main things to concentrate, and I don't want to go for commodities. Pay attention for wheat. It's creating a bullish hidden divergence on a weekly chart. It's creating a extreme continued divergence, on a daily chart. More than 20 candles right. From my point of view, the wheat right from here down to 670 or something is creating a bottom, and right from there is going to start and rise all the way up. As a first target, I would be looking for this trend line. Then of course we have a deepest trend line, so at the end I do believe we're going back to above 800 for wheat. That's about this one. Of course the soybean, I've been talking about it long time. Be aware of these head and shoulders. Start to invest as we have the divergence, but be aware of this head and shoulders. A break could take us lower to 1300, lower to 1250, maybe even 1200, but right from there we're going all the way up again. Same about everywhere, everything else, corn, and of course the natural gas, which I've been talking about. And in the club we mentioned the level 310, which you can see it is retracing from. We were talking on the live trading rooms about that. About the indices, well, it's a very interesting story. I will start with the DAX. I think the DAX is building the beginning of a down. I don't know where exactly it's going to start. If it makes successfully false break above this high, it will be perfect. If not, anyway, I think it is creating a top. There's a beautiful weekly divergence, so every top here will be fake, and when we're in front of a down move. I don't think it's going to be a crash yet. It might be. I don't think it will be right now. The first thing we will be aiming is, of course, this trend line. This could be beautiful target. Same about the Swiss index. Well, pretty careful there. We enjoyed two small cycles. Now I'll be watching for the next important level, and for the Swiss index I'll be watching 7,500. If it makes it with the weekly divergence, oh, that's how I will be there, all in. That's what I call all in. I hope so. It could make it. Not sure. As for now, I prefer to stay away of this index. Even though, again, I do believe it is creating a clear top. For the US indices, I am still staying out. As I said on the predictions for 2013, they could go and create new highs. I will not be impressed by the divergence. It could be fake. It could start a crash every moment. It could go and create new highs. I will be not impressed from new highs, because from my point of view, they will be fake. And the monthly chart is talking for that, as you can see everywhere. It doesn't matter what you put there, S&P, Nasdaq, or the Dow Jones. Well, that's my opinions for this week. That's what I'm going to trade. The euro pairs, I'm going to concentrate on them. Of course, the yen pairs, they are very, very, very interesting. Well, that's all. Thank you very much. Of course, the commodities, I know it's not for everyone, but for those of you who trade it, they are wonderful opportunities. That's all, friends. Thank you very much for watching this video, and wish everyone a perfect week. Just remember, if you trade long-term charts like daily, weekly, and monthly, keep your leverage to zero or completely negative, just to be safe, because sometimes it takes a cycle, and sometimes the things you expect, the divergence we expect, just take time. That's all. Thank you very much for watching this video, friends, and have a perfect week. Yours, Vladimir.